What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is, again, a brief analysis on what we've been seeing on Ortex, the estimated short interest and utilization. We are right at or just over the all-time highs in terms of what we are seeing on the Ortex estimates for short interest at the current time. But there is a key discrepancy between the short interest and utilization that we still need to go over, and exactly why we are seeing this situation and what we can do about it. And the second thing that we need to be going over is that Citadel could potentially have a massive problem at the current time. Yesterday, we all know what was going on with the Ken Griffin lied hashtag, but Citadel came out with a Twitter thread that is very interesting. And if you read between the lines, it is a massive PR move that we need to break down. Now, there have been some more developments on this debt ceiling situation too, and it is kind of spooking the market and making a lot of investors uneasy. Now, over this past weekend, we did talk about the fact that we were most likely going to see a lot of volatility this week due to policy. The debt ceiling was going to take the first spot in what could potentially be moving the markets, and we are seeing exactly that play out. But we're going to go over exactly what most likely is going to happen with this situation and how it is going to affect the overall market. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date on accurate AMC information, the stronger our community becomes. And if you guys want to see more videos like this, make sure you hit that subscribe button. So when we come over to these Ortex numbers right here, the estimates at the current time that I'm recording is 20.76% in terms of the short interest. Now, when we're looking at the utilization continues to go down. So what this means is that somehow, some way, these lending institutions are getting their hands on more shares to loan out. Now, if you do not want your shares to be used against you and loaned out, to basically short sellers who are going to sell those shares into the open market and dilute the price, pushing it even lower, you should consider turning off share lending. Now, you don't have to do it if you don't want to, but it is a helpful thing when you think about the short squeeze and how these shares get loaned out. But again, we continuously see the shorts borrowing a decent amount of shares. Again, today isn't really a crazy day in terms of the amount of shares borrowed and returned, but we are seeing a slight interest in the increase in the short interest again. Now, when we come over to the Citadel piece right here, this is the Twitter thread that Citadel has put out. Citadel Securities did not ask Robinhood or any other firm to restrict or limit its trading activity on January 27th. Well, what about January 25th, January 26th, or even January 28th? They leave it a little vague right here. Citadel Securities was the only major market maker during this time that provided continuous liquidity every minute of every trading day. Now, that also is part of why they got themselves into this situation, which we will also go over. On January 27th, Citadel Securities executed an extraordinary 7.4 billion shares on behalf of retail investors. Ken Griffin and Vlad Tenev have never met or spoken. When asked whether Citadel Securities requested that Robinhood restrict trading, Ken Griffin truthfully told Congress, "Let me be perfectly clear, absolutely not." So let's break down the first thing that I want to talk about. So the first part is these two tweets. Citadel Securities was the only major market maker during this time that provided continuous liquidity. Now, the way that they were able to provide this continuous liquidity is their legal ability of market makers to either take the other side of the trade and sell shares short, or they are naked shorting. If you read Reg Show, the market makers have a legal ability to do a version of naked shorting. And when we come over here, Suzanne Trimbath basically confirms this for us. Market maker equals code for creating phantom shares by 1, taking your buy order, 2, not getting shares at settlement to deliver to you, creating FTDs, but 3, requiring your cash payment anyway. Now, the next part about this is looking at this statement as a whole. Now, we know that hashtag was trending #1 on Twitter in the United States, And Citadel not only is a giant market maker, but they also have a hedge fund side as well. Now, I want you to think about how these organizations operate. They really want to stay behind the scenes. They don't want to make any noise, and they definitely do not want their CEO in any sort of public controversy that involves any type of legal ramifications. What could be happening here and what Citadel is trying to prevent is investors in their hedge fund leaving. Why this would be so important is because if they see a lot of withdrawals coming in the near future, then they are, one, not going to have a lot of liquidity to move around in the markets, but two, they also are not going to be able to have as much collateral as they did before to maintain a lot of these levered up positions. So that's a really big problem that Citadel is facing right now. They are in a public controversy and they are in the public eye now when they don't really want to be in that situation. So we're going to have to see how this plays out and what pressure this is going to put on this institution. But again, they do have a significant chunk of money right now, and we don't necessarily know the relationships that they have with their investors at the current time. Now, when we come over to this tweet right here, Powell, it's essential to raise the debt ceiling. Potential effects of not doing this would be severe. And then FX Hedger says, it's okay though, I dumped all my stocks. So we've basically seen two individuals from the Fed in Texas and I believe in Massachusetts basically say that they are going to be selling all of their stocks due to ethics concerns, and now they are saying that they are basically retiring from their positions at the Fed. That is not a good sign to see. There is definitely some weird stuff going on right now with the Fed, but besides that, when we think about this debt ceiling situation, we have never seen the United States default on their outstanding debt. And with what we saw yesterday coming over here, Senate Republicans block bill to suspend debt limit and avert shutdown in a key vote. So Senate Republicans blocked a House-passed bill to suspend the debt limit and avert government shutdown from advancing in the Senate on Monday. The move comes after Republicans had insisted that Democrats act alone to address the debt limit and leaves Congress without a clear plan to keep the government open, with the threat of a potential shutdown looming by the end of next week. And we know as we come over here that the United States government will run out of money by October 18th, Treasury Secretary says. And that is when we could potentially see this default. So there is a lot of fear over this situation right now. But what we have to think about is that the Democrats can pass this bill on their own. When we come down here, it's possible Democrats could move to strip out the debt limit suspension from the funding bill and attempt to pass a clean stopgap spending measure quickly through both chambers ahead of the deadline, which Senate Republicans have said they would support, but it's not yet clear what will happen. So basically what happened is the first attempt to get this through has failed, but there's other attempts and other avenues that our government can take to kick the debt ceiling can down the road. So what we really have to think about with this debt ceiling situation is that, yes, this has never happened before that the United States has defaulted on their outstanding debt. Is it likely that they are going to default? Not really. Most likely what they're going to do is at the 11th hour, as people like to call it, they're going to pass something to kick this can down the road. But we are going to see news headlines come out that are going to create fear in our markets. And there's also the possibility that they can't get this done and we do default on our debt. Is it likely? In my opinion, not really. Like what we have talked about in the past, it all comes down to how willing these government institutions are to continue to kick these cans down the road. So that is mainly going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.